So I'm going to turn it over to whether it's Sue or Rocco. Who's on first?
I guess I'll go. Thank you, Janet, and welcome everyone. Although, my professional practice at Grassi CPAs is concentrated on tax and consulting for commercial entities, I have over the years developed a good deal of insight into the nonprofit entities as well. Currently as a board member of ArtsWestchester and serving on the finance and grants committees of ArtsWestchester. And my prior philanthropy with North Shore University Hospital many years ago, which I was heavily involved in setting up a foundation for my late wife. I have been educated through these two things on the fundraising challenges, not for the not-for-profit entities specifically, as to the program challenges of arts organizations which ArtsWestchester supports. The situation being even more extreme in the last year since the ability to conduct programs that have been severely limited by the pandemic. The challenge of raising funds to perform the worthwhile programs generated artistic products, assist various communities, and other functions that define your organizations is an enormous burden at this time. We most certainly understand that. Today, we will provide you with an in-depth explanation of several programs that the federal government has enacted to assist and provide desperately needed funding to small businesses and not-for-profits such as yours. The programs that we will be discussing today will be the Paycheck Protection Program loan, that's known as a PPPL, both the first and second draw, and the forgiveness process, the Shuttered Venue Operations Grant, the Economic Injury Disaster Loan, commonly referred to as EIDL, and the Employee Retention Credits. The other speakers on this panel are David Rotkamp and Andrew Marietta. They both have a great deal of knowledge and experience, not only in these specific programs, but in the not-for-profit industry in general. David is a partner of mine at Grassi and is the not-for-profit leader at the firm. He has more than 30 years experience in the not-for-profit area, providing audit, tax, advisory services to a variety of religious, educational, healthcare, and arts and culture organizations. Through David's leadership in the past 10 months, since this pandemic has hit us, Grassi has been successful in obtaining PPPL funding for nearly 250 of our not-for-profit clients, as well as other entities who needed assistance and were not our clients. But we assisted them through the process. Andrew is the Vice President in Regional Development of the New York Council for Nonprofits, commonly referred to as NINCON. He joined NINCON nearly 17 years ago, provides direct assistance to nonprofits across New York State in areas of governance, management, strategic planning, fund development, and risk management. Andrew manages NICON's statewide partnership with the New York State Council of the Arts. It is very fortunate for ArtsWestchester, and I truly believe this since I'm a board member, to have David and Andrew presenting today, and they are excited to participate in this event. So David, Andrew, it's up to you guys.
Great. Thank you, Rocco. Good afternoon, everybody. So nice to be here with you today. It's a pleasure to be here and to have been working in the nonprofit space as long as I have. It's actually about 34 years now since I started out of college, been working in the nonprofit space, and it's all I've ever done is work in the nonprofit arena. A great group of people, amazing missions, amazing programs through all the different types of nonprofit work that we do at the firm that I have done over my entire career. And I'm honored to be here with Andrew from NICON. We've done some co-presenting over the last month or two in some other venues. I heard him speak at the NISCA event last week, and having him with us today will add some amazing and great insight into the Shuttered Venue program. But I'm going to start with PPP with an overview of one, because there were some modifications from the most recent signing of the stimulus bill back in late December. Talk about PPP2, and then Andrew will get into the areas around Shuttered Venue. We do have some compare and contrast analysis to talk about towards the end of our presentation, so please try to stay with us about whether you should be considering round 2 draws or considering the Shuttered Venue grant program. There are some things in there which could be beneficial to your organization, depending on which way you want to go. And we will talk about some of those areas and some of those activities as we move through. So I'm going to share my screen now so that we can get the presentation up on. And Rocco, I'm assuming we can see the presentation now?
I can see it, yes.
All right, great. Thank you very much. So let's just jump right in. So we have the hour to move forward. There's our wonderful pictures. And we're going to spend just a moment talking about EIDL loans, the economic industry disaster loans, and what their benefit might be to your organization if you've received any. If you have applied for an EIDL loan, or you're going or thinking about applying for an EIDL loan, you can do so through a direct SBA application process. The loans are maxed out at $150,000. And they are really loans, 30-year fixed rate interest rates of 2.75%. So it's a relatively cheap loan if you need some additional resources coming into your organization. It does require collateral if they're greater than $25,000, but if they are less than that, there is no collateral to be utilized, nothing to be secured against those EIDL loans. There are the advances as well that were available in the first draw, and there was an impact of the EIDL advances into how it would impact the PPP loan forgiveness, but they are not doing the advance payments now. They were doing that back earlier in 2020. With the EIDL, if you did apply for an EIDL advance, you would have received up to $10,000 pretty quickly. In the round 1 draw, and before the 27th of December, if you had applied for forgiveness, that $10,000 advance would have been deducted from your PPP loan forgiveness calculation, and you would have been forgiven the net amount. Under the new stimulus bill that was signed back in late December, they waived that clause, and now you no longer have to apply the EIDL advance against the automatic EIDL advance against your PPP loan forgiveness. If you did apply it against loan forgiveness in a previous version, your bank should be making you whole, providing you back with that $10,000 automatically. It will be repaid back to you. Not a lot of folks have utilized the EIDL advances, as there are some more stringent rules to have to follow along with the collateral component of it. But if you do feel you need access to additional resources, the EIDL program should be one to consider as you continue to move forward. Everyone who has applied for PPP1 has utilized their funds, hopefully to the fullest extent they were allowed to under the covered period. The covered period ran between 8 and 24 weeks. Many of our clients that we've worked with were able to utilize their funds somewhere between 8 and 24, maybe around 11, 12 to 14 weeks. And they started applying for forgiveness as soon as they were able to. Keep in mind when you do apply for forgiveness under PPP1 round 1, if you have not done so yet, at least 60% of the amount that you're going to be asking for forgiveness has to be based on payroll expenditures. And as we learned from early on in the original application for a loan, for payroll represented by cash contributions and employee health and retirement benefits and state and local taxes that were paid. At the same time, you were able to also utilize up to 40% of those forgiveness amount on non-payroll related expenses, which focused on rent, mortgage interest, and utilities. As you can see described, internet, phone, transportation, things of that nature. So if you have not filed for your round 1 forgiveness, these are the covered period expenses you can utilize. And there was a change, before we go into what the change was, keep in mind with the round 1, any wages that were over $100,000 were capped on a prorated basis across your covered period. So it was $15,000 and change for 8 weeks. It's $46,153 for 24 weeks. Anyone above that, anything above that is not allowed for forgiveness. People who worked or were permanently outside of the United States, as well as 1099s, were not allowed to be included in the round one application, nor can they be included in the forgiveness amount. Keep in mind, if you do have 1099 people on your own, in your own organization, they could have applied on their own for their own PPP version of proceeds and then forgiveness. Federal taxes and FICA, the employer portion of those federal taxes, were not allowed as part of the covered amount, nor is any credit for family and sick leave under the FFCRA. When the COVID Relief Act was signed in very late December, it provided some clarification to those who had not otherwise asked for forgiveness. It said you could include things like group insurance benefits, disability, and life. I know we included a lot of that as part of our initial calculation for our clients we were working with on the initial loan application. But it has been clarified since that late December COVID Relief Act was signed. The covered operating expenses, property damage from any storms, covered supplier costs, and covered worker protection expenditures are now also included as part of the non-payroll bucket of that 40%. So PPE that you've spent, if you did that, you're able to utilize that. If you have certain expenses that are COVID related around supplier cost and operations, you can include them as well if you wanted to use other than payroll. We have found that most organizations were able to utilize and maximize forgiveness on their loans using payroll and using the payroll data, the compensation plus the benefits. Some didn't even have to use the benefits. They were able to maximize just off of the payroll data throughout the covered period. I do mention that we do have the chat box that is in the presentation today. So if you have any questions, feel free to chat them out, put them in the chat box, and we'll try to get them throughout the presentation, or we'll get to them all at the end. We have time at the end for Q&A. Last thing on the forgiveness piece here is that there are 3 applications to be considered: the 3508, the 3508EZ, and the 3508S. The S is the newest version, which is for loans that are under $150,000. It does reduce the amount of documentation that has to be submitted. Actually, there is no documentation to be submitted for an under $150,000 loan using the S application. If you're under $50,000, there's no FTE ratio or wage reduction as well. And these 3 loan applications for forgiveness are applicable to all first draw loans if you have not already asked for forgiveness, and any future second draw loans that may come out. Most organizations that are on this call, because you've had to shut down by state mandate for social distance, for safety and healthy, more than likely will meet the safe harbor exception. And as long as you did not reduce your as long as you did not reduce someone's salary by greater than 25% through your covered period, you will more than likely be able to certify and meet the criteria for a 3508 EZ application if your original loan is above $150,000. There are some small complications here, so it's important that you seek out advice from your service provider to make sure you're filling out the right form, as the S and the EZs are much easier and smaller documents to complete than the full-blown 3508 application. Let's jump into round 2 so we can get into round 2 and then get over to the Shuttered venue program discussion. Andrew, certainly if there's anything you want to add as we go through this, please feel free to do this and to add any comments. If you have already received a PPP loan first draw, you might be eligible for round 2. But if you have not applied for a round 1 draw for whatever reason, you can now go back in today and apply, if it's for the first time, for a round 1 draw. But the round 2, you have to meet these eligibility requirements. One is that you've received a loan, a first draw loan already. And the second item is that you finished spending the first draw. You're not required to apply for forgiveness. You do have 10 months after the end of your covered period to apply for forgiveness, but you will have to certify in the second draw application that you have used your first round monies for their applicable purposes. You have to have less than 300 employees, which is reduced from 500 in the first round. Most importantly, you have to hit a gross receipts reduction calculation in order to final qualify under round two. And that is represented by a 25% drop in gross receipts as defined by the Treasury under section 6033. We'll go through that in just a moment, compared to the same quarter in the previous year. The maximum amount of the loan you can get is $2 million this year. They did allow for some new eligible entities to come into play, which is nothing for this particular group, but most importantly is the last bullet. Ineligible entities include organizations that receive a grant under the Shuttered Venue Operator Grant Program. Andrew will talk much more about that to all of you at the same during his next few slides after I get done here. But if you have applied for a round two, loan, that will not exclude you from shuttered venues. But if you do accept that round two loan, it will exempt you from the Shuttered Venue Program. So we do have some things to think about. I'm working with a large arts and culture organization in Manhattan who applied for a round two loan about 2 weeks ago before the FAQs came out of the SBA around the Shuttered Venue Program. So while they've been approved for the loan, they haven't taken the disbursement of the funds yet in round two, because we're now working with them and determining if the Shuttered Venue Grant Program is more advantageous for them versus the second draw of their PPP, of a potential PPP loan. And you have to be in business and operations on February 15th and prior to qualify. Well, no, you have to be on business on February 15th in order to qualify for a round two draw. The 60-40 split is still the same for eligibility. Big money available, $284 billion. The loan program ends at this point on March 31st, 2021. This is for the second draw. The calculation is the same. It's 2.5 times your average monthly payroll. Many organizations are utilizing the 2019 payroll data because that's what they utilized for round one. But you can use 2020 if you feel that's more advantageous. I'm not sure how it would, because most folks have less salary expense in 20 than they did in 19. You need to include an NAICS lookup number, which you can look up on this website that we have here. And again, that 25% gross receipts calculations has to be done for all second draws. If it's under loans of $150,000, you do not have to provide documentation on meeting that gross receipts test. You'll have to on forgiveness, but not on the application itself for the new loan. If you're over 150 in loan amount, you will be required by the bank to provide documentation on the 25% loan, a 25% reduction in gross receipts. So let's talk about gross receipts for just a moment. It is defined by the Internal Revenue Code in section 6033. And what you can see here is there are 5 bullets that represent gross receipts. And one of the most important things to keep track of here is you should be following the same method of accounting that you follow with your regular audited financial statements, presuming you are audited or reviewed or compiled. It'll be the same methodology. So if you are an accrual-based organization, you should be using accrual-based data to calculate the 25% gross receipts reduction. If you are cash basis, use cash instead. But the 5 elements do not include any netting of expenses at gross dollars, this is different than the commercial and for-profit calculation. So in the nonprofit, gross receipts equals gross income, which is represented by gross amounts received by contributions, gifts, grants, and other similar amounts. Doesn't exclude endowment grants. You would include them as well, or capital campaigns. Those are all part of it. It includes amounts that are subject to dues or assessments by members or affiliated organizations. It includes the gross sales of receipts from business activities without any reduction for expenses there. It includes the gross amounts received from the sale of an asset without reduction to cost. So if you sold a piece of property, if you sold a smaller building, if you sold investments, those amounts would be considered part of your gross receipts calculation. And lastly, you would include investment income, such as interest, dividends, rents, and royalties. You would not include any mark-to-market unrealized gains or losses as part of your gross receipts test. So it's some nuances here you have to be thinking about as you look to calculate your gross receipts in the current period to determine qualification for the 25% or more gross receipts reduction.
David.
Yes, please, Andrew.
I just had answered this question on the chat, but I think it's worth just touching on briefly. Somebody had asked about 1099 contractors and their applicability to PPP, and I had just clarified, and I know you had already touched on it, but that
Please.
1099 contractors are not, when it comes to the organizational application for your PPP, they would not be included as payroll. They're not eligible, although they're eligible independently. They can apply on their own as a 1099 contractor for their own PPP loan.
Great, thank you, Andrew. Appreciate the clarification there. That is confusing, folks, because originally when the CARES Act was first signed, it did allow for 1099s, then it pulled back through clarification. With regard to documentation for the 25%, remember, if you're under $150,000, you need to only document on the back end when you apply for forgiveness. If you're over $150,000 in a loan application, you will have to document at the beginning of the process. You can utilize quarterly financial statements, which would mean a printout of your QuickBooks files or your internal financial statements, identifying what makes up the gross receipts and initialing them. You could, if you don't have anything else, you could utilize quarterly or monthly bank statements showing deposits. That's if you're a cash-based organization. That would be that could be helpful there. You actually are able to utilize your IRS annual income tax filing as well. But I will tell you, if you're a December 31st year end, I would bet you nobody on this call has prepared their 2020 990 at this point, much less even close their books within 33, 34 days. But you can complete the first page and you can initial it and utilize it, attesting that the amount on there is going to be similar to what you will file with the ultimate return. So these are some of the examples of documentation to be maintaining as part of your 25% gross receipts reduction. We are finding that most organizations in the nonprofit world are able to hit this threshold when they focus in on the second quarter, period over period, because the pandemic started in the middle of March. March 13th was the shutdown by the emergency disaster shutdown date. So the impact in the April 1 to June 30th quarter was primarily the hardest hit quarter. However, for many folks on this call, any of the quarters after that date probably would get you to 25% because of the lack of available opportunities to open up your businesses for general patrons to come in and visit. The covered period has been clarified. It's still between 8 and 24 weeks. But as we've been advising our clients, even back during the first draw, it really could be any period within the 24 weeks. So if you finish utilizing your payroll and your payroll gets you to forgiveness after 12 weeks, now you can formally put on the application that your covered period is 12 weeks and the end date. In the old applications, it either was a check mark of 8 or 24. Now we understand the banks have updated their portals or should be updating their portals to allow you to put a start date and an end date, not just an 8 or 24 week checkbox to utilize that. And that is, Andrew, anything else on the covered period?
No, I mean, not, I think, you know, that I think having the flexibility is, you know, really to the advantage of every organization now, because I think 8 weeks, you know, you have that 2.5 times your monthly payroll, which is your average payroll divided by 12, as David had mentioned, times 2.5, and now, you know, so 8 weeks was when they initially launched the program. 8 weeks was too short, and 24 was too long. So you get your choice now.
Makes it a lot easier to move forward with the application process for forgiveness once you hit that cover. But there are still rules in play about having 10 months after your covered period's over to apply for forgiveness if you need that much time. Like we mentioned earlier, for the round 1, but also for the round 2, there are other additional expenses. This is more of a definition for covered operating expenditures, includes things like software, cloud computing, and other areas around HR and accounting needs. Covered supplier costs would be the purchase of goods and items that were necessary for like perishable items and things like that for your business. And covered worker protection is things like PPE, and other adaptive items that are necessary to meet federal health and safety guidelines. It's our thought that most of you will not even have to worry about these non-payroll items for forgiveness, because if you are paying payroll, you'll be well into your payroll usage in 10, 12, 14, 16 weeks to be able to maximize forgiveness.
David, if I just want to jump in for a second, there's a question in the chat for David or Andrew. Is it a conflict for an owner of a single member LLC to receive second round PPP and also apply for the Shuttered venue grant as a separate S or C Corp for-profit business?
That's a loaded commercial question. Andrew, you want to start with that one? You want to
I don't,
start?
I mean, what I can say is that, again, on the nonprofit side, we have definitely heard that there's a lot more scrutiny being given to affiliation relationships. So, organizations that applied for first round were probably, they didn't really see much of additional information requested. Now in the second round, we're hearing that there's a specific affiliation follow-up application or form that is being, in some cases, when you fill out the PPP second draw, you are indicating those affiliation relationships and, those corporate connections. And they are getting we're seeing kind of more of this bureaucratic, kind of these hoops or paperwork to complete. So, I mean, that said, with the PPP, if you have multiple organizations applying for PPP second draw, I think that affiliation piece is definitely going to be a factor. I honestly, I'm not really sure how the affiliation relationship will play out in coordination between PPP second draw and SVO when it's two different corporate entities applying. I don't know if they would connect the dots on the affiliation. I don't know, David.
No, I think you're right. There is more scrutiny going on. The affiliation probably is more significant in round two as it relates to the gross receipts test, because you might have to bring in, I would imagine, the revenue of all the affiliates to determine the 25% revenue, the reduction. I was just advising a private school actually before this phone call on that. They have 4 corporations and payrolls all through one. So I said we should combine all the revenues to determine 25%, as well as the FTE count of 300 or less. I think that's where it comes into play. If you still have more of a question, the person who asked the question, please feel free. There's contact information on the slide, which I believe Sue's making available to all attendees or who was registered. You can certainly reach out to either one of us for some more clarification on this particular topic. All right, Andrew, Shuttered venue. I'll turn it over to you.
And David, I was wondering if it was, I thought maybe just one last thing on PPP second draw, just a clarification, going back to the independent contractor issue. I think I still, obviously through Nikon, we aren't really interacting or tracking independent contractors who are applying for PPP, but there are plenty of nonprofit organizations, especially obviously in the arts sector, that in fact, a number of presenting, arts organizations, performing arts, in the when it comes to the culture sector, 1099 employees are very, very common. And, and I think one thing just to keep in mind is that, unfortunately, if your organization doesn't have payroll, you're not going to qualify for PPP. But those 1099 contractors, including in some cases, we've seen, the leadership of the organizations at 1099 contractors. So you and your other contractors absolutely could pursue PPP. And I think one clarification to make is that, if you've never applied or you're considering applying now, it is a first draw. So you're not going to be held to the 25% gross revenues decrease criteria if you've never applied for a PPP. It would be treated as a first draw application. So I just think that's just something to mention. If your independent contractors have never applied, absolutely pursue the program. I assume if they have applied, they probably are looking at applying for a second draw if they meet the qualifications.
Sounds right. Thank you, Andrew.
So I think I know Janet had mentioned, when we first were starting and connecting here, that this is the big question about Shuttered venue operators grant and the payment protection program regarding your second draw. What really is to the advantage of the organization? So, I think ultimately for most organizations, it's really going to come down to if you're a clear fit within the criteria, because I would just say that Shuttered venue has a narrow scope. in terms of, what this program really was intended. They had certain organizations in mind, very specific criteria, and that I think I'm just going to try to give just a general overview and then point out some considerations as you're looking at your own circumstances or your organization. But first of all, Save Our Stages is the other terminology for it. We're talking about the same program, Shutter Venue Operators or Save Our Stages. The SBA now has posted a section on their website called Shutter Venue Operators Grant. That's where they're posting criterion updates. And so overall 15 billion was allocated to this program. 2 billion of that 15 billion is earmarked specifically for organizations, entities, for-profit, nonprofit, that LLCs, all those different categorized entities that have 50 FTEs or less. And when's this program going to start? There's really there is no announced date at this point. You can the advice on the website for the SBA is to keep checking back. We do know that what we're kind of the general understanding is that the program should launch by late February. There are some legislative guidelines around developing a plan by February 10th. So I think this is definitely a work in progress. They move very quickly in putting the information up, although it is brief. But we at least know that we have some start of guidelines, and now we're just waiting for the application and the finalized criteria. Just like the PPP, there is a revenue decline requirement. You have to be able to demonstrate 25% gross earned revenue loss. So this is a distinction from PPP, which was gross revenue loss. So they really are looking at your gross earned income. And so it's a period comparison. So April to December of 2020 as compared to the same period in 2019. So I'm sorry, let me clarify. It's any quarter in 2020 as compared to 2019. When it comes to the prioritization schedule, that's when we're going to get this specific period of April to December. So to qualify for the program, just on the surface, you have to have this 25% gross earned revenue loss in any quarter of 2020 as compared to 2019, the same quarter. So same kind of concept as PPP, just a distinction of different revenue focus area. So it's earned income instead of gross revenues or gross receipts. What they are doing is they're having these prioritization applications timeframes. So there's 3 priority schedules, and this is where I'm not the first time I'm going to mention it, but we don't have true clarification about what that revenue loss is truly related to. Is it gross receipts or is it gross earned income? That is not clearly articulated by the SBA on their on the SBA website, and it's not in the FAQ at this point that was provided January 27th. So from that period of time, April to December 2020 as compared to April, December 2019, the assumption seems to be that that it will be gross earned income loss that will be the focus, and that's what we've heard through recently through another organization, a national association that met with the SBA. SBA indicated that their intention is that it would be gross earned income, which but no indication they're going to update put that in writing. I don't, I think their perspective is this is it's going to be the same approach I think you see with the PPP, kind of evolving as it rolls out. But I do think, for most organizations, and this is where we'll get into considerations, it would be best to obviously look at both gross and earned, but more likely it seems all criteria for this program are tied to earned income. And so these ranges, I'll come back to 90% loss, 70% and 25%. Those are our 3 scheduled cycles. And then overall, the grant amount, this is obviously to the benefit of organizations. You're looking at 45% of that gross earned income from 2019 with a cap of 10 million. And so that's the main piece everyone's focusing in on.
Right.
So I think we can go to the next slide.
Right, and Andrew, to that point, it's different than the PPP 1 or 2, which is based on level of expenditures on a monthly basis times 2.5. So there might be opportunities under the SVO program based on that 45% amount to have a higher dollar value coming in as a grant versus the P. And we'll talk more about that later on.
Yeah, absolutely. Yeah,
This earned income, gross income determination is one of the harder things to grasp. So why don't we spend some time on that?
Yeah, and yeah, I think we have a couple examples that speak to kind of the math behind 45% earned income versus your 2.5 times your average monthly payroll for PPP. So what came out in this FAQ on the SVO on January 27th last week was very, everything in it pointed to earned income. They talk about earned revenue, defining it. They talk about gross earned revenue, defining it. They talk about what isn't earned revenue. So, so it seems like there's nothing in it about overall gross revenue. So they spend time in this FAQ telling you that what earned revenue is related to. And really, again, it's what I think most people would assume, tickets, admission tickets, merchandise, food and beverage sales, advertising sales, contracted presentation kind of fees. And then they talk about what isn't included, contributed income, membership wouldn't necessarily. They talk about what would be included, what wouldn't be included. And so they make some positive clarifications. We included here the link to that FAQ, which you can also find on the SBA website. But I think from a defining earned income, which again is very distinct from PPP, which is gross receipts, we have some clarity here in where the focus of this program, Shuttered Venue Operators Grant, seems to really rest. And really from a cultural standpoint, for cultural organizations, for the majority of organizations, it really will be more advantageous that it is focused on earned income versus overall gross revenues, gross receipts, because you don't have to include your contributed, you don't have to include grants, donations. So that really is probably to the advantage of most arts organizations. So I guess I'll just end in saying that we still need, that we really still need true clarification on revenue definition for the grant prioritization schedule. And I think we'll have to just watch, and I think we'll get the determination probably when the application launches. But I think my understanding is that it would be best, from a prioritization perspective for your own organization, is you would want to examine gross revenue and earned revenue. I'm sure you're looking at different categories of prioritization and applying based on the two revenue kind of assessments, but it seems very likely that earned revenue will be the focus. So prepare with that. I would say it would be safe to prepare with that understanding at this moment from what seems to be the indication. So eligibility, again, just like PPP, we have some very specific eligibility that kind of set the guidelines. So you would have had to have been fully operational on February 29th, 2020. So going back to last year, and right obviously before pandemic hit and impacted most organizations and shut down many performing arts organizations, especially. You have to be able to demonstrate that 25% gross revenue loss in any quarter in 2020 corresponding to the same quarter in 2019. You have to be able to operate or intend to resume operations in the near future. How well, what's the restriction on that, or what's the time frame? That is a hard thing to define, especially with COVID related restrictions and safety requirements in all states in the US. So clearly the language is giving some flexibility there. How much? We don't know at this point. And then they talk about live event related requirements for these different categories that we're going to just touch on in a moment. And then they also clarify, which is the same with PPP, second draw, that your, these other relief funds like PPP first draw, for example, is not going to count as revenue. So that's just with SVO as well. When you're looking at that 25% gross earned revenue loss, PPP doesn't have anything to do with that calculation. And then there's some other, I'm not going to go into the exclusions there. I don't think they're applicable to most arts organizations that would be looking at the SVO. It's definitely probably more on the for-profit side of things where you're in multiple states, much larger entities. So and then the entity type. So we have these categories: live venue operator, promoter, theatrical producer, live performing arts organization operator, relevant museum operator, motion picture theater operator, talent representatives. Very governmental terminology, but this is what we have. So we're going to focus in more on I think where most arts organizations fall. So we'll go to the next slide. And so really what first of all, we're just touching on here is that really that live performing arts organization, those presenting arts organizations. And so in this kind of categorization, which probably is the majority of culture organizations that would be looking at, the Shuttered Venue Operator Grant, you're kind of looking at these two scenarios of eligibility to qualify, and so if you're really looking at, do I qualify for SVO? This is where, if you're not in one of the other categories in terms of a movie theater or a museum, then this is probably the broadest category, but it's a bigger question of, can you meet these other requirements around your principal business activity? And in the FAQ, the SBA did provide kind of some more guidance. They're going to be really looking at, what was your operation? What do you really do? That might be a part of that application they're going to ask you for. They're looking at ticketing. They want to see evidence of that ticketing process, fee structure, that you have a fee, kind of that you're charging something, that the performers are paid somehow, percentage, contract, contractual, an agreement of some sort. And then in the first scenario, 70% of your earned revenue is derived from these covered charges, ticket sales, production fees, production reimbursements. That is going to be something people really need to look at, because if you have a significant grant or a donation, and that's how you cover your operations, that's going to be hard to meet that. Clearly, it's going to not make you a good fit in eligible scenario number one. So then you go to number two, and you're looking at the same thing, principal business activity, keeping in mind, they really are going to look at that you are a fit within this presenting organization category, and that you're doing these event tickets to live concerts, comedy shows, theatrical productions, presenting, and that your performers are paid in an amount, again, some kind of contractual agreement, and percentage sales guaranteed in writing, whatever those circumstances. So that they're going to ask you for that documentation as a part of the application. So as you're looking at these two scenarios, you got to figure out, are we really a good fit? And then we're going to move into the venue requirements. And this is where a lot of confusion has arisen. And actually, before we move to that, this is just the other kind of brief overview that we have for motion picture, museums, and then talent representatives. So we again, we know kind of same, in these categories, I think the focus really is more it's going to be more on the venue requirements, especially when it comes to movie theaters, nonprofit movie theaters in our, it is what I think of it from a cultural perspective. That because again, for Nikon in our role, we aren't really dealing with for-profit businesses, but you're really looking at those venue requirements, and so that's where we've got more clarity now as well through that FAQ. Although it was we had some basic guidelines to follow for sure, but when it comes again to these performing arts organizations, those the presenting organizations, we don't see fixed seating in here, and that was a point of confusion when it came to the FAQ from last week. Fixed seating And my understanding that I've heard is the SBA will be correcting that FAQ to clarify that really was intended to be tied, to the categories of museums and movie theaters, motion picture theaters. That is an absolute requirement. Fixed seating for movie theaters is an FAQ that says, is a drive-in theater qualify? No, there's no fixed seating. It doesn't qualify. If you're a museum and you don't have a dedicated fixed seating space, you do not qualify. That's very clear now in the SBA FAQ with shuttered venue. With live venue, you'll see nowhere in here does it say fixed seating. So it's really, getting in, more specifically, want to look at, do you have a defined performance and audience space? Doesn't say fixed seating, mixing equipment, public address system, lighting rig, then these individual kind of positions that you have to at least be able to demonstrate, two of the following: sound engineer, booker, promoter, stage manager, security, the box office piece, then again, paid tickets, paying your artists, marketing, and again, just to clarify, because this comes up, you're seeing nowhere in here does it say, these have to be employees. So independent contractors could be doing these positions clearly. And I think, could a presenting organization that's completely run by independent contractors apply for SVO? I think absolutely yes. I think that there is no, doesn't seem to be any indication or requirement that with PPP, you have to have employees on payroll. When it comes to the SVO, we're not seeing that kind of language. And that's where, if we go to the next slide, and it actually, I'll touch on it in another moment. We even see, a clarification around what you can use the money for that further reinforces kind of the flexibility of this program. But again, the FAQ that I've mentioned a couple of times, fixed seating, permanently fixed to the floor or ground per the Economic Aid Act. So it's in the legislation. And I just added applies to museums and movie theaters because that was the intention. And my understanding is the SBA, it's created more confusion than actually clarification. So I think they are, the intention is that we will fix that and tie it more specifically to the categories, the entities they meant it to apply to. Because if you look at live performing arts organizations, nowhere did it ever say fixed seating. And then the other piece to this is regular programming. There's a lot of questions. Regular programming under the museum entity category, that again is where you're going to see that definition or that language. And so the FAQ defined, if you are, it doesn't say museum, it just says what's regular programming, but what they've defined it as is, that this is ongoing, near continuous basis, at least 4 times a month over the course of the year in that qualifying theater, lecture hall, or similar venue. And again, that's tying back where you see regular programming, you see that under the museum criteria to qualify.
Andrew, where do you see a nonprofit art gallery fitting into all this?
That's a real challenge. I mean, this is what I was kind of saying about the narrow scope of SVO when it comes to an art gallery, which again, let's just broaden it and say it's a multi-art center where they have an art gallery, they have a presenting element to their organization. They might have a defined performance space, and there are many of those types of organizations across New York State. That type of organization, they really are going to have to focus in on the live venue criteria. Right. And that's where they might have some real challenges in making the case that they're really a clear cut fit for SVO. And that kind of moves us towards our considerations discussion. So, but before we jump to the considerations piece, just again, that prioritization schedule, you can, hopefully everyone's kind of seen it. Again, April to December 2020 compared to the same time period in 2019. What is that revenue loss? And the idea being, most likely would be gross earned income. So if you're in that 90% or greater category of earned income loss in that comparable period, then you're in round one, 14 days. Then the next 14 days is going to drop down to 70% or greater. And then after that 28-day first period, you're going to see 25% or greater. So where do you fit in that cycle of prioritization? And then of course they have some supplemental kind of funding available after the first priorities. And, so really the big consideration here is how far is the money going to go? And we'll just touch on the use of the money, which hopefully everyone has kind of taken a look at that. But, so you're looking at, costs that were incurred from March 1st, 2020 through December 31st, 2021. So you can go back and that's also in the FAQ. Can you refund, tickets to people, the cost of tickets, which, I'm sure for David, on an accounting perspective, have those liabilities sitting on your books. Yep. Probably is scary situation for a lot of arts organizations. So if you can ask, here we have in writing, can you refund those tickets? It's in the FAQ. Yes, you could use SVO money to pay back that liability cost, which is great. So that's just something to point out. But otherwise, there really is a lot of flexibility. Payroll, including independent contractors, to a maximum amount of 100,000 per independent contractor. So they put a cap on it, but you can pay your rent, you can pay your mortgage and debt payments, not prepay, but those ongoing payments. That's a distinction from PPP. You could only cover mortgage interest. You can pay, maintenance expenses, administrative costs. So there's a lot of flexibility, and then there's some restrictions. Of course, you can't, they're going to look at when those leases or rental agreements were in effect. So they have to be in effect as of February 15th of 2020. And then you can't spend all that money. There's a limitation to how much you're going to spend on advertising or marketing. And then you can't buy real estate. You can't invest the money. You can't reloan the money. And of course, you can't use it for political contributions. So,
Andrew,
but
what we don't see here, Andrew, is any limitation on payroll dollars, which is very interesting.
Yeah, no.
Unlike PPP, which caps you prorated at 100,000 or 100,000 right. To a max of 100,000. They do this for the independent contractor, not necessarily for the paid salary.
Yeah. No caps. We don't see any caps. Now, does that mean there might be caps? Who knows?
I think there might be, actually. I have a thought that when they provide more FAQs, they might want to, especially the executive level administrative type personnel.
Yeah, I think we should start just a betting pool on how many FAQs there's going to be on this program, because I am if you look at PPP, and this in the
about
SBO,
60 days, about 60 to 80 days for they issued almost in 3 months, about 30, 40, a lot of FAQs. So there's going to be coming out still.
So if you're looking at this program, get ready for kind of the roller coaster ride of FAQs and ongoing eligibility updates and who knows what the reporting requirement is. I'll be honest. I mean, this is obviously a more targeted program. I don't think politically you're going to get the kind of advocacy or kind of like the focus on making reporting very easy with PPP, which we ended up kind of getting to that point after I think a lot of pushback on the complexity of the original 3508. Who knows what this reporting requirement is going to look like for this program. And I think you take the money. We have to understand, as we know in the in the nonprofit sector, and especially for culture organizations, there's strings with those dollars, and so you just have to recognize what those strings attached might be.
Andrew, Susan, I'll finish my thought. I probably have a question to ask as well, but this could be somewhat analogous, Andrew, to what's going on in the healthcare field with Department of Health and Human Services and their provider relief funds. They provided this wonderful program, put all kinds of parameters, which were complicated. They issued updates over 3 months. They opened up application processes to apply for funds and they distributed the money. But then when it came to reporting, they put a date, which was back February 15th, 12 days from now. And they already announced 3 weeks ago, they are not going to open up on 2/15 because they can't figure out how to handle the reporting under all the stringent terms and conditions. So I would imagine even in this situation here, ultimately when the funds are dispersed, there's going to be underlying terms and conditions that are going to have to be followed and met as well as part of you accepting the award, because there'll be an approval. You'll not only certify the information, you'll have to accept the award as well, subject to you complying with terms and conditions. So just things to also be thinking about when they eventually do open up the application process. Sue, you had a question or something you wanted to add? I'm sorry.
Well, a couple of things had come into the chat, so I don't want to segue
Yeah,
too
can
much,
we-
but just want to make sure that
Can we go
that
to
they're
the-
addressed.
Next slide, David. Just, I know there's two last slides here, and I think just very quickly, and then yeah, I think there's a couple of questions that can be fairly answered fairly quickly. Just real quickly, there's these two scenarios. One is definitely an organization that that I'm personally familiar with. Small cultural organization. It's fairly small. I mean, for 220,000 puts them in the middle. With that kind of small to medium size 300-seat theater. They did get PPP in the first draw, so they can get the second draw. They would get $20,072 and would give them 2 months of payroll and overhead. When it comes to their kind of perspective of overall gross earned income and their earned income kind of assessment, their earned income was $75,536. So if you got 45% of that through SVO, it would be $33,991. That is $13,000 in more, or a little bit more than that, obviously. The challenge for them is the categorization where they actually are in the prioritization cycle. Even when they look at gross revenue, they're out. They're not even in the third cycle. If they look at earned revenue, they still are kind of not in those top 3 priority cycles, or they are in the third cycle essentially. And so for them, they applied for they've already made the decision. They applied for PPP second draw, and they will accept that loan. And that they felt was, in weighing the opportunities and the associated risks of, getting money now with the PPP second draw, which is processing. And I should mention, David, the SBA did just post an update, 72 billion in loans processed as of January 31st. So we know that 72 billion is out the door as of the 31st of January. 284 billion, so
25% gone.
Yeah, and we don't know what the breakout of that is, first draw versus second draw, but I can tell you, I looked previously, January 24th, the update was 35 and change billion, and so from the 24th to the 31st, you had it double in terms of loan size or the loan processed. So how quickly will that money go is one question, obviously. But in terms of your considerations, just one other kind of, again, real world organization, but hypothetical, because they haven't made their decision. If they took their PPP payroll, their payroll and did the PPP second draw would be $312,500. Their operating budget's 4.2 million. If they look at their gross earned income now, much larger, 2.3 million. So the SVO 45% would be over $1 million. So they would do much better with the SVO. So that, really what their considerations would be, and this would be for everybody, when is that SVO going to roll out? What grant cycle are they in from a prioritization standpoint? So if we get that gross earned income as the true definition of revenue loss, then does that push them into the top prioritization cycle, the 90%, or the second one, that's the 70%? How far would that 15 billion go? And then on the other side of it, how long is the PPP money going to last? And the last slide just kind of, again, lays out, some of these, these considerations, the overall criteria that, for SVO, what's it really going to look like when it's finalized and posted? What are the application requirements that are involved? PPP, very straightforward. Documentation, as David mentioned, you could submit the same documentation, but when you file for the report, you don't have to you don't have to provide any documentation now to get loan forgiveness. And then, SVO application, we don't know what it looks like. We do know from that FAQ, you do need a DUNS number, and you also have to have an active system for award management account. And so that can also take up to 2 weeks to secure that system of award management account. So the FAQ does mention it. They provide some additional information. So there's more complexity to applying for the SBO application that organizations have to keep in mind and address. And then, of course, what's the time frame for funding? If you have to wait for SBO and wait for the determination process, what happens if the PPP money runs out and you don't get the SVO money as well? And the one bright spot hopefully, on PPP is that, with the new legislation, the new stimulus that's being proposed right now, they are looking at putting additional PPP money into the program, which probably, you could maybe safely make the assumption that the PPP program will last beyond March 31st. I don't know, David, what your thoughts are.
That is an expectation. We believe that the money there will be money through the entire quarter period, only because there's some new rules that don't allow certain types of organizations to apply. The loans are now capped at only $2 million, which is very significant. And we know that 80% of the loans are very small loans to begin with. So we think the money will last, but I would imagine that, when this program gets rolling out, hopefully the late February timeframe, very early March, it'll give organizations an opportunity where they will have evaluated what their SVO criteria is already, so they can slot it into the matrix of what the time frame and things like that, and then compare and contrast to a PPP round 2 amount, and ultimately get their application one way or the other, depending on which direction they want to go. I do know there are some questions that have come into the chat room before we go over to the employee retention credit. Is there anything else, Andrew, and we have any more slides on this topic?
No, that was the last slide on SVO. Okay. And I don't know if you want to address these couple of questions.
Let's address a couple of questions. Can you see them on the what's involved in securing an SAM account?
Yeah, I mean, I first of all, just to be very clear, I personally have never applied for a SAM account myself. But we're talking this is much more common with federal funding. So, if for those of you in the museum sector, for example, if you've ever gone after IMLS funding, the Institute of Museum and Library Services, those larger federal grant programs, there's a lot more bureaucratic components to them. And, in terms of the SAM account, the FAQ that I referenced, they have a link to where you would apply and start that process. They do clarify in that FAQ that, basically that certification that comes back through that can take up to 2 weeks. I cannot personally speak to applying for the SAM account itself, but that's why we wanted to raise it as an issue, because if you are looking at SVO, you definitely would want to move forward with this as soon as possible.
I would agree. You start that process now. Getting a DUNS number is really not all that complicated. It's a pretty straightforward, simple process. I've seen it with other larger nonprofits who have federal funding. So, but I would say if you're thinking about it, it doesn't hurt you. It doesn't hurt to get one and to get your system set up.
Yeah, and some people are sharing this link that somebody's sharing. That's also in the FAQ.
Yeah.
And I assume somebody listed a webinar link. So I'm sure there are webinars out there that talk. Yeah, this says here's an on-demand webinar on the process right in the chat. So that's great.
There you go. Andrew, there's one question before that on the scene. If you've seen that one about the Performing Arts Center.
Yes. Yeah.
I'll read it while you look at it. Do we have an eligibility issue if our Performing Arts Center was formerly managed by a for-profit entity? Our nonprofit took over in March of 2019. We would only look at the quarters when we were in management. Question. I'm not sure the management of it matters.
Yeah, I would
But you're
agree.
talking of being managed by a for-profit entity in a you're still a not-for-profit performing arts center, it would sound like. So the entity itself still exists. So I don't think the management of it has any impact in terms of the qualification for eligibility, and as well as looking at the quarterly revenue calculation.
Right there. Yeah. And they maybe, you know, just from, I mean, I guess the one positive is they took over in March. So in terms of that revenue comparison, April
April
to
1.
December 2020 compared to April of December 2019, that would they obviously would have those financials accessible and should be able to pull that information together. I don't think, I agree. I don't think there's an eligibility issue there. You know, it's just going to come down to you know, I assume you'd have the, you know, the annual return, you know, the 990 for 2019, 2020. You know, I'm sure you'd be able to provide that documentation. And I don't know, David, that we already talked about this. Does a nonprofit art gallery work for SVO? And I would say probably not a good fit unless you can meet the other eligibility requirements outlined for live performing arts venue. An art gallery is probably not, you know, it's not a museum. It's definitely probably not a live performing arts venue.
Yeah.
So you're gonna have a hard time being a fit within this program.
It just is a straight arts gallery. I think you're going to have a challenge with that. So the PPP2 is probably the likely avenue for you to follow through in terms of getting additional loans. But lastly, there is one other program to mention, and thank you, Andrew, for that. That's I would say it's clear as mud, but you explain it much more thoroughly than mud. It's just a lot of moving parts in this topic, a lot of which is not fully vetted out. And like PPP, it took months to get the clarification. Even still, it wasn't always 100% clarified. But there is one more opportunity to be thinking about, and you should be talking with folks that you're working with around the employee retention credit, very high level. This was rolled out back in 2020, and this represents an actual tax credit to your organization, not cash coming in the door. But what it does, it was really focused on organizations that had to either partially or fully suspended their business operations due to COVID-19. That was back in 2020 when it first came out. But in addition, if you didn't have that, you had to have at least a 50% reduction in gross receipts on a quarter-over-quarter basis for at least one quarter, comparing 2019 to the same quarter in 2020. When this was updated, when the last relief bill came out at the very end of December, it still included partial or full suspension if it's still going on, but it also create in the or category only a gross receipts decrease of 20% in the same quarter compared to the previous, or 20% in this quarter compared to the direct preceding quarter. So it reduced the threshold for eligibility for employees to potentially be able to access the employee retention credit. Those businesses like the restaurants and hospitalities that either had to close partially, or those businesses that still continued to be open but had a decrease in revenue and receipts, they had to hit those thresholds to even qualify to begin with. We're focusing on 21 for the most part because that's where most folks have an opportunity here. And what the employee retention credit does is if you are an organization that has less than 500 employees and you paid your staff during the year, any wages that were paid to employees would qualify as part of the under 500 count, and you'd be considered a small employer at that point in time. And the qualified healthcare expenses also are part of the wages paid calculation for the employee retention credit. What the credit did for 2021 is it allows you to take a credit if you hit the criteria for the full-time employees as well as for the revenue reductions of each employee who worked in a quarter. It's a quarter by quarter calculation, that you would get a 50% credit for wages up to $14,000 paid and health insurance paid for that employee within that quarter. So the most you could get is a $7,000 credit per employee per quarter for the first quarter and ultimately then for the second quarter of 2021. That's a total of $14,000 that might be available to you as an employee retention credit if you did hit the 20% revenue reduction calculation in 21 and you were under 500 full-time equivalents within your organization, which I would imagine most of you are. The credit is an adjustment to your 941 payroll tax liability. And there are some other rules around refunds and advances that you can get and obtain with some more further clarification as the rules come out. But this is an opportunity on the employee retention credit to possibly get that credit. Now, you can't use the employee's salary for the retention credit and use them for PPP loan forgiveness. So you got to pick where you want to use that as well for use of the salary expense. You can't double dip the salary expense into each of the buckets. So what I suggest you do is you think about the employee retention credit. Think if you have hit that 20% gross receipts reduction, or if you were partially or fully suspended by a COVID-19 governmental order during the period, to determine if you may have an opportunity to apply for employee retention credits. It's a pretty detailed analysis which needs to be looked at, and we have plenty of experience in doing that with our clients, and can certainly do some for you as well if necessary.
David?
Some of the things to be thinking about around ERC. And Rocco, I think that's all that we have. Was there anything else on ERC you wanted to mention?
Yeah, I just want to add that if they need to, if they feel they're eligible for the 2020 credit, they can file an amended payroll tax form and get it. The payroll tax form was filed probably by their payroll provider by January 31st. In addition, it appears that the healthcare costs of the furloughed employees, even though you didn't pay them wages, the healthcare cost of the furloughed employees
Yes.
could
Yep.
qualify you for the credit itself. So there are some opportunities there to get that. Also, employees that took a pay cut and now you want to give them a bonus over and above their salary. As long as you don't apply, as long as you don't, that's not part of the forgiveness of the PPP, those wages qualify as well. So there's a lot of opportunities here to get some money. And 5,000 per employee.
And Rocco, even those employees that were capped at 100,000,
right,
you had the excess above the $46,000 amount, or the excess above the 100,000, I should say, that would be eligible as well in this employee retention credit program.
right.
Okay, Sue, is there anything that's coming into the Q&A? Because this is the last slide that we have, folks, as part of our presentation. I don't know if you wanted to bring folks up or let them have an opportunity to ask any direct questions or put it to the chat box.
Yeah, thank you. Thank you for all of this. There was an earlier question that I wanted to make sure got covered regarding, I guess, teaching artists. I just want to scroll up so I ask it correctly. Here it is, from Brooklyn, from YTI. Do you think live instruction by a professional performing artist would count as an event by a performing artist?
I mean, I think we have to wait for more criteria. I mean, I guess I'm trying to get at I guess it would depend on the overall scenario. I think if it's a mix of the programming that this performing arts organization is offering, then I think it's a part of the overall programming mix. And I don't think the intention of the SVO is to scrutinize every single programming element. But if the question is more from the standpoint of a performing artist, that they're doing all their own performances, and and they have some kind of space and they're thinking of applying for SVO. I'm not really sure if you could make the case from a criteria eligibility standpoint.
Yeah.
You really are going to have to go back to the criteria for performing venue, and do you meet those two eligibility scenarios that were outlined? That's really what it's going to come down to from my perspective. I don't think it matters truly what the, you know, the programming aspect is. Was there ticketing? Was there revenue? Is there a contract? Like, you really have to go
Yeah.
back and look at those aspects.
I would agree with that. There's those two scenarios on that. And again, they're laid out in the slide deck and they're also in the FAQs as well.
Thank you, everyone. A wealth of knowledge. So we're at 2:18. We had assumed that we might go up until 2:30. We've got some great questions that we've already covered. Just a few more minutes. If anyone else has a question, you can either put it into the chat. You're welcome to. Or at this point, I think we can be daring. And if anyone wants to just unmute and ask a question directly, you can also do that.
Right, and it can be about PPP as well, by the way. It doesn't have to necessarily always be about, not necessarily about SVO too, so. All right, Sue, it looks like we're in good shape.
You've answered every question. Everyone has all the information that they need ever.
So I would just like to say thank you to Rocco and David and Andrew from the heart of ArtsWestchester. We really appreciate this expertise that you've brought to us. Rocco brings that to us on a regular basis, but we don't always have the whole team. So we're very grateful that you're here, and I'd love to do this again sometime. I think it's very helpful for our affiliates. So thank you so much.
Our pleasure. Thank you, Jen.
And Andrew, thank you
Our
for
pleasure.
joining the team.
Thank you for inviting me.
I'm gonna pull him out an icon and have him come work with me. Do a traveling roadshow. I wouldn't do that to Doug. Don't worry, Andrew. Don't tell him I said that.
Anyway, it's very helpful, very helpful. I mean, there's a lot of organizations that do this, but they don't do it specifically for the arts. And some of the kinds of questions that we have, you know, really drill down to eligibility and so forth. So thank you.
You're welcome. If there are any follow-up questions anybody has once they get the deck, our contact information is on the very last slide, along with our pictures and emails and phone numbers. So please feel free to reach out to any of us if you'd like. And we wish everyone a wonderful day. Stay safe and stay healthy and stay warm with all the snow that we've had. And Sue, I guess any final comments from your perspective before we finalize?
No, I think we're good. Just lots of thanks coming into the chat. So yeah, as we said, we'll put all of this up on the ArtsWestchester website and email it around. So it's a resource that can be accessed to anyone and everyone that might need it.
Excellent.
Super.
Have a great day, everyone. Thank you very much.
Thank you, David.
you.
Thank you, Andrew. Thank you, everyone.